What if I told you that one of the largest buyers of US government debt was quietly converting all their profits into Bitcoin? And what if this company was making over $1 billion every 3 months doing it? In these clips from the TFTC podcast, Preston Pysh breaks down a concerning development that the Federal Reserve seems to be completely overlooking. Preston is a renowned financial analyst and investor who's been studying monetary policy and Bitcoin for over a decade. He's also the co-founder of the Investors Podcast Network, which reaches millions of listeners each month. Preston reveals his recent conversation with Paolo Ardoino, the CEO of Tether, about their strategy of buying short-term treasury bills and what they're doing with the profits. What's particularly interesting is how this could create a serious problem for the Federal Reserve's control over the monetary system. The numbers we're about to discuss are staggering, but more importantly, they reveal a pattern that could completely reshape how global finance works. Before we get into it, if you enjoy this type of content, hit the like button and subscribe to stay updated with the latest from the TFTC podcast. You can find the full episode in the description. In the next few minutes, you'll learn exactly how Tether is making these billions in profits, why they're choosing short-term debt over long-term bonds, and what this means for the future of the US dollar. But first, let's hear how this all began.
Marty, this was the moment that because I had that conversation with Luke before this conversation I had with Paolo from Tether. Okay, so in this conversation I had with Paolo, I was like, so what would it take for you to start buying long duration bonds? Like, let's just, because think about it, he's there buying like 3-month paper. He's making 5% on all this annualized. He's making 5% on the principal of all this paper that he's buying to just issue more coins, which are in high demand all over the planet because of the saleability and people that are unbanked. Okay, so he's providing that service. He gets to keep the coupon of 5%. And I asked him, I said, and what he's doing with the coupon, which is just pure profit for him, you know, he's making billions. His last quarter, he made $1.3 billion just on the coupons from all these treasuries these short duration treasuries that he's holding. And he's plowing most of all of that into Bitcoin or some type of like R&D tech that's going to further along Bitcoin development in some areas. But for the most part, he's like plowing it all into Bitcoin.
This moment Preston is describing is crucial to understand. Tether has found a way to make massive profits using the US government's own debt system. Here's how it works. Tether buys short-term government loans called treasury bills, which currently pay 5% interest. They use these treasury bills to back their digital dollars, which people around the world use because they're easier to move than regular bank accounts. These digital dollars are in high demand, especially in countries where the banking system isn't reliable or where people need quick access to US dollars. The shocking part, they made $1.3 billion in pure profit just from interest payments in 3 months. That's more profit than many Fortune 500 companies make in an entire year, and it's all coming from government interest payments. But what's really turning heads is what they're doing with all that profit. They're buying Bitcoin. This creates an interesting loop. Government debt generates profits, which then flow directly into Bitcoin. It's like they've built a money printer that turns government debt into Bitcoin. The Federal Reserve has always been concerned about losing control of the monetary system, but they probably never imagined it would happen like this. The irony is that by trying to fund government spending through debt, they've created a mechanism that's actually undermining their control of the financial system. But what happened next in Preston's conversation with Tether's CEO reveals why this should really worry the Federal Reserve.
So that becomes this incentive for him to actually be a buyer of the longer end of the curve. So I bring this idea up to him and I'm just like, so like, what would that percentage look like for you to start buying longer duration bonds? If the US government came to you and said, hey, we'll back the 10-year with this 10-year issuance with 10% Bitcoin in it, would you be a buyer at that? And Marty, his response was the funniest thing I've ever seen in my life. He basically looked at me and was like, yeah, no way in hell. He didn't say that. But like the look on his face was like, give me a break. Like, no, I'm gonna keep buying these 3-month paper and I'll plow it into Bitcoin. And like, I'm not gonna deal with that risk of like how much needs to be backed. Right. And this guy is number 18 in the world of buying US treasuries.
This interaction between Preston and Paolo from Tether tells us something incredibly important. When Preston suggested that the US government could make their longer-term debt more attractive by backing it partially with Bitcoin, Paolo basically laughed him out of the room. Why? Because Tether has found a perfect strategy, they can make guaranteed profits from short-term government debt and buy Bitcoin directly. There's no reason for them to take on additional risk when the current system is working so well for them. They're now the 18th largest buyer of US government debt in the world. Think about that. A company that didn't even exist 10 years ago now has more influence over US government debt than many countries, and they're using that position to accumulate more Bitcoin every single day. This is particularly concerning for the Federal Reserve because they need buyers for long-term debt to keep the system stable. When interest rates are higher on short-term debt than long-term debt, it's a sign that something is seriously wrong with the financial system. But when one of the largest buyers in the world won't even consider it, even with Bitcoin backing, it shows how broken the system has become. The Federal Reserve is losing control of the debt market, and companies like Tether are taking advantage of this weakness. They can't force companies to buy long-term debt, and they can't stop them from converting their profits to Bitcoin. But the numbers Preston's about to share show why this is just the beginning of a much bigger trend.
Like, I think that the number of, like, just for Tether alone is like 120 billion that they're backing with these 3-month paper issuance that's kicking off 5% coupons. I have no idea what that trajectory is, but like, if you told me next year at this time that it was 180 billion that they had backed, it wouldn't surprise me in the least bit. The US needs to accelerate their issuance. The desire around the world for dollars in particular is accelerating.
The scale of what's happening here is mind-boggling. Tether already has $120 billion in these short-term government loans, and Preston thinks it could reach $180 billion next year. This matters because every dollar of profit they make from these loans is being converted to Bitcoin. To put this in perspective, that's more money than most countries' entire annual budgets. The Federal Reserve is essentially watching one of their largest debt buyers systematically convert all their profits into a competing monetary system. This is happening at a time when the U.S. government needs to borrow more money than ever before. But here's the real problem for the Federal Reserve. They need buyers for their long-term debt, but companies like Tether only want short-term debt. This forces the government to issue more short-term debt, which means they'll have to keep paying these high interest rates. Imagine if other major buyers of U.S. debt started following Tether's strategy. It would create an avalanche of money flowing into Bitcoin. The government would be forced to keep paying high interest rates, generating even more profits that get converted to Bitcoin. It's created a cycle that's pumping more and more money into Bitcoin, and the Fed seems powerless to stop it. Even if they wanted to shut this down, they need Tether's billions to fund the government's debt. They're caught in a trap of their own making. They need the money, but the money is being used to build a competing financial system. The financial system has accidentally created a machine that's funneling billions of dollars from government debt straight into Bitcoin, and it's getting bigger every day. This could be the biggest threat to the Federal Reserve's control over the monetary system, and it's happening right under their noses. The more the government needs to borrow, the more powerful this Bitcoin conversion machine becomes. Do you think the Federal Reserve is powerless to stop what Tether is doing, or are they secretly happy about it? Let me know your thoughts in the comments below. I read every single one. And if you found this breakdown of Tether's Bitcoin strategy fascinating, you need to watch our last video about how inflation numbers are being systematically manipulated. I revealed exactly how the government changed inflation calculations in 1983 and why it matters more than ever in today's economy. The connection between hidden inflation and Tether's massive Bitcoin purchases is becoming clearer every day. Click the video on your screen now to understand why this could be the perfect storm for Bitcoin adoption. And if you want to stay ahead of these crucial developments in the future of money, make sure to subscribe to the channel where we break down these important stories every week. Stay humble, stack sats,